Welcome back to Tax Problem Solved. I'm your host, Deltrease Hart-Anderson, and you're listening to a brand new series within our podcast I call Stop IRS Letters. This is where I break down the scary letters from the IRS and tell you what they really mean. Today, we're tackling one of the most common and most misunderstood notices the IRS sends. That is the CP2000. Here's what the CP2000 is. It's the IRS saying, hey, what you reported on your tax return doesn't match the information we got from employers, banks, and other third parties. Pretty much, the math ain't mathin', right? Maybe you got a 1099, it was lost in the mail, you could have moved. Maybe you forgot about a small brokerage account, or you thought it wouldn't make a difference if you put it on your tax return or not because you took a loss. Maybe your employer sent the IRS a W-2 with a typo. They fixed that typo, but did not send you a corrected W-2. It could be a lot of different reasons why you're receiving that CP2000 notice. However, whatever the case is, just know that the CP2000 is a notice. It is not a bill. It is a proposal of a bill. Now, if you do not respond to that CP2000 notice, then it could turn into a bill. But otherwise, it's just saying, we think you owe more money because of this mismatch. Do you agree with us or do you disagree? Here's what happens if you ignore that CP2000 notice. The IRS will assume that you agree. They'll assess the taxes, they'll assess penalties, and they will tack on interest. Before you know it, that simple mismatch or misunderstanding is going to turn into a huge balance, and you don't want that, okay? I had a client, true story, that ended up with the CP2000 notice with owing over $1 million. After we assessed what he really owed, the IRS ended up owing him money instead of him owing over $1 million. He panicked initially, but once I investigated what was going on, everything was resolved within a couple of months. Okay. Now, what should you do if you receive a CP2000 notice? There are 3 steps that I want you to take. Number 1, compare the IRS's information to your records. Did you really miss income? Did you have your data wrong? Was it just a misunderstanding? Did you not submit the right W-2? Did you submit a part of your brokerage account or none of it at all? Okay, was the tax return completed properly? Step 2, if the IRS is correct, then sign that CP2000 response form, send it back to them. Now, this will mean, or it may mean, that you may owe them some money. No big deal. Don't panic here. You can set up a properly structured installment agreement. What do I mean by properly structured? Properly structured is what you can afford to repay the IRS, not necessarily what the IRS feels that you can afford to pay them. Okay? Always keep that in mind. You want to go for the properly structured installment agreement if you can afford it. Step number 3, if the IRS is wrong, don't just submit the form saying I disagree. You may have to send proof. Not you may, correction, you will have to send proof. Send copies of your W-2s or your 1099s. You might have to send a particular form from your tax return, okay? Or a corrected form from your bank or your employer. But send the proof along with you saying you disagree. That's it. Bottom line, a CP2000 isn't the IRS accusing you of anything. They're not accusing you of fraud. It's just them saying something doesn't match and we want to fix it. We want to get it right. Okay? That's it. So if you've got a CP2000 in your hand right now, or if it's in your drawer, if it's on your table and you're not sure how to respond, don't wait. Don't panic. Take action. I'm Deltrease Hart-Anderson, keeping the IRS out of your pocketbooks, wallets, and bank accounts. If you have a letter, submit it at www.stopirsletters.com and let's solve your tax problems for good. Till next time, bye y'all.